Hello everyone, this is Professor Kent. Today's recording is for Chapter 8, Break-Even Analysis. But before we go to the break-even analysis, some of you asked me to record the break-even analysis chapter, but I'm going to teach the chapter through the foundational exercise. There's 15 questions that we have to do. Before we get there, if you're given a question, this is an income statement for the company, and what they told us that the relevant range of the company is between the 5,000 to 15,000. That means your fixed expenses will be stays the same. Within that, you can produce that many units, and if you're within the units, your fixed costs will not change. Now, the contribution, what is the definition of contribution margin? Contribution margin is what is your margin when you're buying and selling. You sell a product, but you buy it. So when you buy it, we call it a cost. Sell minus your cost is your contribution margin. Margin can be represented in units, or margin can be represented in the ratios. They can be represented in unit, or they can be represented in a ratio. So when you do this kind of questions, what we needed to do is contribution margin per unit. We're looking how much money the company is making per unit before the fixed expenses. So we have a sale, we have our variable expense, and we have our contribution margin. My sales can be represented in a dollar value, could be represented in units, or could be represented in per unit cost. Could be in per unit, could be a number of units, or could be a dollar value. So they told us in the question is looking for per unit. If it's a per unit, we're looking at this. So then when you're looking for per unit, what you're looking for is that their sale is 200,000, they sold 10,000 units. If they sold 10,000 units, divided by 10 will give me per unit cost. In this case, your per unit cost will be 20. I should get a calculator here. So it will be $20 per unit. Now if they're saying what is the cost contribution margin per unit. So if I take, this is the total value, if I take each the sales by $10,000, 10,000 unit, my variable expense by 10,000 unit, my contribution margin by 10,000 units, what that will give me a per unit cost. It will give me a per unit cost. So the first one is I don't have the answer, I'm working out the answers as we go. 200,000 divided by the 10,000 gives me 20, and that is my selling price per unit. If I take 120 divided by the 10, that will be my 12, and my contribution per unit will be 8. So the question is asking what is the contribution margin per unit is 8. So my selling price minus variable expense equal to your contribution margin. Going further, they are saying what is the contribution margin ratio. When you look at ratio, they're saying what percent. We're looking for ratio is in a percentage. Sales are always 100% because we decide what we're selling at. So sales are always at 100%. My variable expense, I take my cost per unit divided by your selling price will give me 12 divided by 20 gives me this is your 60%, and this is your 40%. So that's what it is. So 8 divided by the 20 should give you 40%. So the question is saying what is the contribution margin ratio. Ratio is known as a percentage. In this case, it is a 40%. is your contribution margin in a ratio. Or you could also in a unit, sometimes you could do it in a dollar value. So if I take my, I'm going to do it here, if I take my total sales, um, total sales is that I divide it by 200,000, and that will give me 1, and that is my 100%. My 120 divided by 200,000 gives you 60%. 800,000 time divided by 200,000 will give me my 40%, which is my contribution margin. Either show it this way, show it this way, show it this way, but you're going to get the answer at the end. So my contribution margin ratio is 40%, and this is my 40%. My, I already did this. This was my $8. The expense ratio again divided by your 200,000. Well, we already worked it out before. It was 60 percent, so that was the 60. Now this is the this is the data that is given to us. They said sales increase to 10,001 unit. What will be the increase in income? Instead of us doing the full calculation, what we're going to do is we are going to, so my current sales are 10,000. What if we sold 1 unit? What will be the impact on the operating income? That's what the question is looking for. So if you're looking for just so the impact on my operating income if I sell 1 extra unit will be that I will make $8 more, because my contribution margin per unit is 8. If I sell 1 more unit, I will make $8 more. So my net operating income will increase by $8. So net operating income will change by, or it'll increase to 8. So let's go further and see what happens into in the 8.5. It's if the sale decline to 9,000 unit, what will be the net operating income? So they're looking for what is the operating income is going to be if the units are declined by 9,000. So you have a sales minus your variable expense equal to my contribution margin minus your fixed equal to my operating income or a net income. So we sold 9,000 units. Per cost was 20, so then my total sales will be 180,000. My variable expense changes according to my unit. So we sold 9,000 units. We able to buy 9,000 unit at $12. So the cost or our variable expense or cost to the company will be 108. Difference between the selling sale and variable expenses equal to your contribution margin, and that is my 72,000, or you could do it at 9,000 times the 8, depends on what is given to you in the question. Then my fix does not change. My fix is going to be 60,000 and my operating income is 12,000. So the answer to 8.5 is 12,000. Going further, if the selling price increased by $2, sales volume decreased by 1,000, what would be the net operating income? So let's look at it. Or look, oh, I should have raised that. So what will be your net operating income? So let's look at my sale. I have my sale minus my variable expense equal to my contribution margin minus your fixed expenses equal to your net operating income. That's what they're looking for. They said the sales volume decreased by 1,000 units. We have to go to the original. My original was 20,000 and now it's gone down by 1,000. I sold 19,000 units. If I sold 19,000 units, they said also Excuse me, sorry. The selling price is increased by $2. So my current selling price was 20, it is increased by 2, and my selling price is 22 now. So that's how we got the 22. We will have 19,000. My variable expense did not change, and my contribution margin will change to 10. How did we get a 10? 22 minus your 22 minus your 12 will give me a 10. Now I needed to uh, prepare the income statement. 198,108. My contribution margin will be in this case you take your sales minus your variable expenses, and that will be your sales, and that is my 90,000, and my fixed expenses are 60,000, and that is my 30,000. So that's what they told us. And that is my 30,000. Now let's go further, and what the further question is asking, if the variable cost per unit increase by $1 and the spending on advertising increase by 15,000. So my advertising is increased by 15,000, so my fixed expenses become 175,000. My original, this is my selling price, my variable expense was your 12, my contribution margin was 12, was 8. They said my variable expense will increase by 1, so now my variable expenses are $13 per unit. Now let's look at it, and then also said that the sales unit increased by 2,500, and what will be the operating income. So there's so many changes that we are doing. So my current revenue, I always go back to my original data. Everything is an independent. So 20,000 minus the 2,500, and what that gave me, it gave me that my original was 10,000, and they said that my sales are increased by 2,500, and that will give me 12,500 will be my sales in unit, and they did not increase my selling price. That still is 20, and that will give me $250,000. My next component is my variable expense increases. So my variable expense, I have to calculate on 12,005. Original was 12, increased by 1, so now my selling price is 13. So what that give me, 162,500. Difference between the both sale and variable expense is my contribution margin. It can be represented in a unit, or it could be represented per unit cost. So in this case, per unit cost will be a 7. If I were to take 12,500 multiply by 7, it gives you 87,500. Going further, my fixed expense did change. Yes, it did change. Now it is 75. And then that is my net operating income, which is 12,500. So the question is asking, what is my net operating income. Now the whole chapter is break even. At what point, how many units do I have to sell to recover my fixed expenses and my variable expenses. I don't want to. Break even is where you don't make any money at all. Break even can be shown in units or in a sales dollar. So it could be shown in a unit or a sales dollar. How many units do I have to sell to recover my fixed expenses? And I'm not going to make any income. So that's what it is. So the formula is the break even in units. So we have break even sale in units. How many units do we have to sell? So if it's a unit, you have to divide by the you per unit cost, per unit contribution margin. If it's a break even in sales, a break even sales in a dollar value, sales in a, if you're looking for in a dollar value, then what we needed to do is in the formula we have to divide by the contribution margin percentage. So in a percentage, so the formula is in this case my fixed expense divided by my contribution margin per unit. My formula is same, but it changes. It's a fixed expenses divided by my contribution margin ratio. Ratio is always shown in a percent. Now if I do it in unit, I can easily it can easily change. We can easily do the question, but we needed to calculate my break even. My fixed expenses was 60,000. My contribution margin per unit was is 8. So what does that give me? It will give me I need to sell 7,500 units in order to break even. If they're looking for break even, say in a dollar value, I can easily take 7,500 multiply by the break even contribution margin ratio. Sorry, not multiply it, divided by, oh no, sorry, I'm doing it right. So times my selling price, which is your 20, and that should give me 150,000 my break even in sales. But the other way to calculate is my fixed expenses did not change. My contribution margin is 40%, so this is a 40%. It has to be shown in a fraction, so you could do it 0.40. So what would that give me? It will give me the same thing here. So 150,000. So it'll give you the same number. Either you calculate it this way or you calculate it this way. Choice will be yours when you're doing it. So let's look at the next one. The next question is asking how many units do they have to sell not to break even but also make a profit. In this case they wanted to make a profit of 50,000. So we wanted to make a profit of 50,000, and they said that how many units. So if it's a unit, we go back to this formula. My fixed does not change, and what changes is my contribution margin doesn't change, but my formula change. I need to add my target profit. So that is, I add the 50,000 to my 60,000, and how many units do I have to sell to not just break even, also to make 50,000. So my answer will be 13,750. So that will be my answer. They did not ask for dollar value, so we will not do a dollar value. So saying that, now my next part of the question is, which is your 11, margin of safety in dollars and margin of safety in a form of percentage. So the answer to this was 13,750. That will be my unit. So what we needed is, we need a margin of safety in dollar is, when we calculate margin of safety in dollars, I'm just going to we are gonna because I have way too much information here. So what we're gonna do is we are gonna 811. You have an actual sale, or we call it budgeted sale, in a dollar value. And then we have my budgeted sales, and I have my break even sale. We did calculate the break even sales, and I think when we calculated 8-9, if you go back to your 8-9, my break even sales were 150,000. So that's what my break even sale was. My 7,500 was the unit that we have to sell in order to break even. So let's look at margin of safety in dollar value. So my break-even sales, we worked it out in 8. My break-even sales in dollars, we know that is 150,000. And then my next one is, what is my actual or my budgeted sales? So in this case, they said that this is your income statement, and this is my actual sales. So my actual sales is 200,000. You could be given budgeted or an actual. So difference between those two will be my margin of safety, and that is represented in a dollar value. In a dollar value, that is your 50,000. If I need a percentage, I will take margin of safety in a dollar value, margin of safety in a dollar value divided by your actual sales or budgeted sales if it's given 200,000, and it will be shown in a percentage. So this will be the answer to the percentage is 25,000. 25%. The margin of safety in dollar is 50,000. Going further, the degree of leverage. So we have as a degree of leverage. When you talk about degree of leverage, the formula of degree of leverage shown in a fraction form. So we look at my contribution margin divided by your net operating income. You always go back to the original data, and then that is my contribution margin was 80,000, and my operating income is 20,000. So I will take 80,000 at the top, and I will have a bottom number as my 20,000. My degree of leverage will be equal to 4. So they're saying use the degree of leverage. What is the estimated percentage increase in net operating sales if I offer 5% increase in sales? So what happens is they're saying what will be the increase in my operating income if my sales increases by 5%. So how we're going to do that? We are going to look at we just calculate the degree of leverage. So we calculate a degree of leverage, and that is my 4. And what the percentage change in sale, it is change in sale is 5%. If I multiply by the both numbers, what will that give me? Percentage increase in my net operating income. %. So now let's go to further and see what the next question is asking us to do. So they're saying, and the next question is they're saying, assume the amount of the company's total variable expense and fixed costs are reverse. So they are saying that my assume the amount of variable expense and fixed are reversed, and the other words, assume the total variable expenses are 60 and the fixed are your 20. Under this scenario, assume the sales remain the same. What is the degree of leverage? What is a degree of leverage? So I have to go back. I need to recalculate my contribution margin using the same data that we had. I'm gonna take my sale. My sale did not change. They said the sales are still 200,000. My variable expense is my 60, and that will give me my contribution margin, and that is 140. And then we needed to look at it. I needed to look my net operating income. I needed to deduct my fixed expenses. My fixed expenses are 120,000, and that if that's 120, that'll give me my operating income. Again, your formula does not change for the degree of leverage, but my amounts have changed. The formula for degree of leverage, I'm just going to put it again. My bottom number is my operating income, my top number is my contribution margin, and that will be shown in a fraction if degree of leverage will be 7. So degree of leverage will be 7. So let's do the last question. I will do another recording for it for appendix B. So now they're saying using the degree of leverage that is computed in the previous question. So degree of leverage that we completed just now is 7. They said what is the estimated percentage increase in operating income if the sales changes by 5%. So it's the same thing. You take degree of leverage and you multiply by the increase in sale, and that is your 5%. Your operating income will increase by 35%. So increase in income will be your 35%. So this was the whole chapter. Foundation exercises represent the whole chapter. So if you haven't done the whole chapter, this will give you the whole background of the whole chapter. Again, you needed to calculate what is asking you to do. It could be asked you for in a unit or in a percentage or in a dollar value. So just pay attention to that. Thank you so much for watching. Take care and bye for now.